Make it. All right, guys. So, welcome to a little Charts and Labs themed discussion. We're talking about crypto, specifically things that are affecting or around Texacoin, and making sure that the community is educated about not only the project, but things that are crypto related and things that could also be affecting the market value of the project, um, and how things can progress forward. Hopefully, this gives everybody a little bit of clarity and some understanding. So when they see stuff being posted, they can have a decent understanding and not be in fear. So a couple things: the Genius Act is passed and being acted on. The Clarity Act is passed at the House, but is not passed the Senate. They are actually making their own or they're in the process of kind of rewording and reverberating some parts of it to fit their needs, and it didn't pass them yet. But we have a pretty good understanding of what it's going to be, and so let's kind of talk about the two. So the Genius Act is mostly focused around stable coins, identifying what creates a stable coin, who's allowed to create a stable coin and issue them, and how do they kind of flow and operate. The big thing around them is for um, with both the Genius Act and the Clarity Act is that we are in a process that the US wants to be the crypto capital, a crypto mecca, and they're trying to set the standard. And it's going to be interesting because a lot of things that are rooted around the crypto space and designation of what it was designed for was, decentralization and no kind of authority or governance and kind of free opening. But the the US is saying, hey, we want crypto to work and function and be accepted, but it has to have at least some regulation to it. And what we've seen is, the SEC's gone after Ripple, the SEC's gone after Coinbase and Binance. We're dealing with that directly right now with TXC, and it's because the way that crypto is operating and the way that the SEC wants to try to govern right now, there's a little bit of gray area and some verbiage that causes some confusion. What is the difference between a security, a commodity, and a payment system? A lot of crypto projects are trying to gear themselves as payment rails or commodities, which is why they are not securities. And the SEC is just trying to enforce its kind of older, outdated language. So let's start with the Genius Act because that one's already here and set. It's about stable coins. The primary ones that we have are USDC, USDT, and PayPal USD. Um, there has to be a reserve backing is the big thing. If you're going to be allowed to issue a stable coin, has to be backed. And the way that the Genius Act defines what is a backing is US dollars directly, treasury bills, or some type of short-term government security. This is supposed to prevent collapse. This is a protect the investor, protect the holder kind of thing, and hold the issuer to some kind of level of regulation that they need to have. I'm hoping I'm not chopping up too much. I just got a bad internet connection thing, so hopefully I don't get booted. Um, Going forward, there is a transparency requirement with the stable coins. There has to be reserve disclosures, has to be some type of independent third party auditing, and there's redemption policies. How am I off ramping that from the USDC or from the USDT to the fiat, to the dollar? There has to be clear policies in place. So we have like USDC and USDT. There's a lot of states right now that are working on issuing their own stable coin of sort that they want to offer, and this will all kind of tie into how they are able to do that. They have to have some type of backing reserve to make sure that they're not just issuing and printing their own money type of thing. So as of right now, the based on the Genius Act, banks and regulated financial companies and licensed payment issuers are the only ones that can issue a stable coin. So this is important for obviously trading because all of the cryptos are paired with a stable coin. You have like Bitcoin as USDT or as USDC that they trade differently. This is going to set up and affect cross-border payments, decentralized finance, settlement between exchanges because of that on-ramp, off-ramp policies, and for them to be able to have the USDC or USDT, that stable coin paired with the crypto that's being traded, they have to have a backing and hold it if they're trying to issue it themselves. Um, so now if we shift to how the Clarity Act is proposed, the Clarity Act goes beyond just stable coins and is kind of defining all crypto. Um, what becomes a commodity? Bitcoin is seen as a commodity, digital gold kind of thing. If you're not going to be a commodity and not going to be a store of value, then you have to have a distinct function. And so the common one is payment systems and payment rails, and or some other type of utility. And like Ethereum is kind of fitting into that utility token, but a lot of the other ones are kind of getting geared into payment systems or payment rails. And if you're outside of that, you're going to be kind of like a meme coin with no value, and you're probably going to get the axe. So coins that have, or at least kind of pushed out and over, and the regulations probably going to make it very difficult for you to operate. So to be able to be within the guidelines and to really prosper through this is where TXC's payment rails and payment system and the utility focus is so strong in its case against the SEC, is that it is focused on utility. If a crypto token represents an investment in a project, promises profit from a team's efforts, involves fundraising tied to future returns, that's where they're trying to lean into the security part. The part that the SEC is trying to push onto these is that investments need to be registered properly, and kind of you can't just issue more of them. Like a common thing with like stocks that you see that messes with the value of a stock is called a shelf offering, and that's when a company says, "Hey, right now we have 1 billion shares. We need to raise some money, so we're going to sell 200 million more shares." Well, that's a huge impact on the amount of shares in the company. And the way that crypto functions is if you're selling an investment based platform like that, there needs to be regulation and settings to where you can't just print more coins and print more tokens willingly and affect the value of the investment. But when it's a utility, when it's a payment rail like TXC is, that's where the value is determined based on the community and based on the free market kind of thing, and not promised by the project itself. Um, their focus is on creating the use of the item, and then all of the amount of coins and all that stuff is kind of already set because it's in the tokenomics, and that's what separates it from a security. When you have a Tesla share, Tesla, Elon goes and tweets about, "Hey guys, I'm going to make more shares because we're going to buy more land, or we need a new rocket," and shareholders kind of vote on that. Well, with crypto, there's no way of shareholder voting and such, so that's where that separation of utility and separation of um, commodity or separation of a security comes into play. So a secure network power up with a protocol and a mine that produces in a decentralized process creates more of a commodity, and that infrastructure play, which separates it the from those securities, which is where TXC's focus is. The proof of work, the mining guys, the mining coins are all going to be actually are going to benefit from the Clarity Act getting kind of more of a highlight of value versus the kind of the altcoins and the make believe coins, or the made out of thin air coins, are going to get really pushed away and struggle with this. So kind of a simple introduction and explanation. I already kind of did this. Sorry, I have some notes to kind of follow, and I already jumped into the stock comparison. So let me skip through that. The industry impact, the banks, funds, and large financial institutions are going to be able to use these systems because we have the Bitcoin and and Ethereum. They're working on Solana. I think XRP already has one. These ETFs because they're trying to invest in these also and offer them as financial services in this digital asset market. Uh, and the other driving factor that a lot of people are trying to do is called the tokenization of real world assets. And what they're trying to do is they're trying to take, say real estate, for example, or gold, for example, or a business or of any sort, and allow people to invest in it similar to how a shareholder would invest into it, but doing it through the crypto side. And so if you're doing that, you need to register it with the SEC like a stock or like a share of a company. If you're doing it with gold or something that's a commodity, then you kind of have some loopholes still because you have the same benefits of commodity investing that you don't have to register that. But if you're trying to tokenize a business to go around to do a workaround to not register with the SEC, that's what they're going to get you with on this Clarity Act. So the defining moment when this is passed, we'll see how this stuff works. But you're going to see a lot of people looking to tokenize real world assets, and this litigation, these laws that they're going to pass, are going to really give the ways to do it, and hopefully some quote unquote clarity on how to do it exactly. Um, Trying to protect against fraud, misleading marketing, poorly backed financial products, protect the investor, which is where the TSB is right now. And you see a lot of other SEC going after these crypto projects. It's because they're just trying to make sure that that nobody is being fraudulently sold something that's not true. We know the mines are being built for TXC, and the network's being built to help with these layer two projects like the downtown digital and such. So that's a real product and creating a real value, real infrastructure. Real infrastructure is the key to navigating through this Clarity Act. Genius Act is stablecoins. Clarity Act is proposed legislation right now, trying to define what crypto is and the different types of crypto. Those are kind of the topics that covers. We can dive deeper. Real quick, I just want to see, did anybody have any questions so far? Are we cruising good? Kind of just reading through some stuff. And just want to make sure nobody has any questions. Raise your hand if you do. If not, I can kind of go forward a little bit more. I think we'll roll forward. Okay, so if we want to get into the specifics around like a proof of work layer one like TXC and how the Clarity Act and the framework around it is a big deal moving forward. Open participation and the value is tied to the network use. Broad token distribution. These are all good points that the Texas side has that's going to be strong with a digital community for a digital asset. Mature blockchain system. All right. The mining and network participation are functional and not just a promotion. The fact that we see these mines fluctuating right now, the development team putting in effort to make them more efficient, is all strengths showing that this is a growing project and a real project. Proof of work. Let's see, I think skip some of that stuff. All right, so this is going to go into like the TXC ecosystem because we have a lot. We have not only the Iskander network that's going, but the future layer ones that are going to be across the globe. We're going to have multiple 100 terahash mines cross mining each other. This is an international system. Each chain will be independently functioning, but assisting each other. Broadly distributed, operationally useful on its own, so that they're not dependent on the other one working. They're assisting the other one working. That's a key term that's going to stay in that infrastructure guide and that transaction and utility where they operate individually but are bolstered and kind of supported. Um, will help each other, and through this Clarity Act, international cross mine allows U.S. person to access it. U.S. based changes exchanges and brokers can use it. U.S. based founders can promote it, and the project has U.S. legitimacy, even though those other mines are going to be across country and foreign. That's key in the Clarity Act. Better path to being understood for infrastructure. More pressure to prove decentralization, more discipline around promote insiders. Yeah, skip. What could hurt? Easiest way. Clarity Act ties separate crypto that works like public network from crypto that works like an investment contract. Yeah, so the way that the Clarity Act is separating it is this is a utility with infrastructure within an infrastructure plan, not a business trying to create value out of a group of other investors to make that. So that is the separation of what a crypto project is like TXC versus what the SEC is looking to get rid of or block from the crypto world and misleading people. Um, and yeah, the more you look into this, the Clarity Act is actually going to actually really help the Texas community and Texas network because of its focus on infrastructure and utility. One thing that we want to, when you talk about the infrastructure of something, this is the Texacoin one. I want to go to, let me share my screen real fast. This is a cool thing to follow. Get this up. So what we're looking at is the Bitcoin production cost, and around the infrastructure of mining Bitcoin and permissionless and global. One of the big things around a proof of work is it is kind of monetizing or valuing energy, and so that production cost is the energy consumed to create one Bitcoin. And what you see on this green line kind of the trend price of what Bitcoin has been. And this purple line, you're seeing that's their investment, what they average. This is the electricity to produce. So what this kind of does is if you take this group of numbers on what it costs, and you can overlap it with the price of Bitcoin, this blue line is the cost that it takes to mine one Bitcoin. And you can see in this red group that we've got it's a little bit crowded and blurry. But we zoom in, and you can see that currently right now the price of Bitcoin are the green arrow or the green lines up here. And the cost to mining it is exactly what the price has been lately, and it's kind of suppressing it. In the past, we've seen the price exceed this. Let me see if I can go back a ways. We spiked up, and then that was kind of a crazy spike. But for the most part, Bitcoin for a long time has followed its price to what it is to produce it. And it's something that people kind of overlook with these things, is that thinking that crypto is just made up out of thin air. But a lot of crypto is actually produced with real life, quote unquote, real life assets like electricity. And that's where you see that's what's holding the price of Bitcoin up, is because of how much energy it's used. When you look at TXC right now, the mine is still establishing and still building, so you don't have that cost of production and that true value of the energy to the token yet, because it's in that production phase. So we don't have that chart to kind of overlay and compare yet, and that's why right now the market is in kind of a find a value. And early projects, I've said this a few times, early projects are very dependent on the early community to establish the value, establish the price that they think that the project is worth. And that's where the participation comes from. We've seen Texacoin kind of kind of jump all over the place price wise, but the volume is one that has been the most indicating or indicative of what the value or what the community is seeing. When you see a lot of volume pickup, that means that there is a lot more activity and a lot more people that are seeking out the coin. And when we look at this is Bitmart. Make sure that we can see this. So this is off a trading view. I have an indicator that I built and I use on um, on here, and then you can pick Bitmart or MEXC to use for their volume and for their other reporting data and info. So we can zoom out and we see this spike here randomly back in February last year. This was from a couple bots going active, and they kind of went back and forth trading each other and ran the price up erratically, but technically nobody actually sold that. There wasn't actually a real person. And if a person had placed an order during that time, it probably would have shot that down and it would have stopped. But because nobody was placing orders, the bots got real crazy and went crazy, went a little willy nilly. So if we start from that as kind of our reference point, each one of these candles is 4 hours, and that's kind of a big portion of the day. So we're going to just kind of use that to kind of see. But if we go back, so here we are around the time a year ago, and our price that we're looking at was around the 34-cent range. But if we look at the volume, I'm going to get this volume up. Might have to actually go to Bitmart to see it because it's not showing. Is it showing? Volume. Oh, there we go. Volume showing. So around March, I think today was the 9th, 7th, way off. March 7th, our volume was 6.75 thousand. That's how tiny the volume was. So whenever there was a liquidity injection that you see that came in, there wasn't enough other participants, so that high surge created a huge move in the price that wasn't built on a true foundation. You see that if you think of like the three little pigs, the straw house versus the sticks versus the brick, you have to have the volume that we see nowadays. We have such huge volume compared to what we did back then. So we go into March 7th, which was yesterday on here, volume 29,800. So we've 5x'd the volume from previous. So a huge increase for Bitmart, which is the main exchange that you see. Let me see if I can go into a new one for CoinMarketCap. Or Texacoin. Bitmart is our largest exchange, most active. It was one of the first ones. I think it was listed in January or February of 2025. So it was the first one that wasn't DEX trade, and then prolonged after that. And it wasn't until August that we saw the other exchanges come live. So if we look at our volume over here, we can see Bitmart is our number one volume. Dollar-wise, we're looking at $61,000. DEX trade number two. But you can see here on our bottom scale for the day, we've really cooled off on our volume, and that volume is what we need for the participation. So as volume increases, price will also increase and value will increase to others. But yeah, mostly just wanted to kind of talk about the Clarity Act and the Genius Act, kind of get some feelers out on how the SEC looks at these projects so people can see what they're looking for, and how that's affecting Texacoin. So I don't know if anybody has any questions. Go ahead and throw a hand up. I can jump in and answer those. If not, we can always go on to another topic. Our poor bots are out of range right now. I think we got one actually working. Just gonna go in. This one's working. Let's see what I got. Now up to $3.46 in 5 days reinvested. Let's see, overview or no placed orders, transactions, balance change history. Uh, Open. Started with 710 TXC and I'm now up to 828. Looks like a pretty good grab. Well, small group, as a couple people jumped off, no questions. Might call that. That was a quick one. Yeah, so Clarity Act SEC, we will get some guidance on what they really want everything to be, and that's going to be that's going to allow these projects to move forward. Clarity around the X, you bet, Ann. Thanks for joining. Everybody have a good night. I'm going to get this recording up for those that missed it or want to share it, and catch you guys on the next lesson. Cheers. Yep. Everybody have a good night.